Good evening, friends. Thank you for being over here. At present, the markets are in a very bullish phase. The sentiments are running very high, and everyone is confused what to do, whether to sell off, take the money, because the memories of 2008 are also very strong, that all of a sudden you don't know when the floor below you goes down. So we thought that the best thing, I beg your pardon?
There is a third option.
Which?
Go on holiday.
Go on holiday. I agree with you.
It's
So,
planned from you.
yeah. So we thought that how does one identify that things are about to change or things cannot be as good as possible. If you see the past history of all the markets, the foolishness and the stupidity of the investors, they're saying, is at its peak when they madly start rushing into IPOs, because that is the last leg. Of course, that leg can go on for another 3 to 6 months, but that is the last leg, which we saw even with the Reliance Power issue, that it was a stock at that point of time given to you at over 5,000 PE. The Reliance Power issue, it was over 5,000 PE, if you consider the financial of that company. Still, a 10 rupee stock, people were willing to give 430, 450 rupees for it. And that time we at PPFAS were very sure, okay, well, this is the last leg, because you can't have such craziness going on. But this is how investors behave. And my idea of taking the psychology of initial public offerings today was to, I would say, all of us, let us understand what is the psychology which goes beyond these public offers. All of us human beings, we are always fascinated by something new, and we always believe that let's discard something old. Even there is a car, if you go to change your car, you always want to sell off your car. And although the new car is expensive, you want that car. In your old car, you got fantastic leather seats, but today in the new car, they think you want those leather seats, but you want to discard those very good leather seats. So every time human beings are only thinking of discarding the old and getting into the new. Because when you get into the new, what you are really looking at is the value of a mystery. The value of the mystery is the greatest because it is unknown to you. That's why we are always trying to think what it will be, what it will be. And that is one of the reasons that you have the anomaly of growth stocks. Because there is nothing like a growth stock. A growth stock has to be a value before. But when it is a growth stock, dreams are being sold to you, and you believe that there is something which you don't understand would ultimately turn out, and you will make up yourself a millionaire. So was the case when we had the tech boom. We never understood what technology could do. So we went by the herd mentality that, well, bricks and mortar is dead, the new economy is in the offing. New growth industries also come in similar fashions, like we had it in the infrastructure sector, the power sector. And similarly, when a new issue is coming, you believe that this is something new, so I have to get into it. Now, over a period of this presentation, we'll come across that what stupid mistakes we are making, considering that an IPO is a new IPO. Now, why do we have IPOs coming? Because they want to raise resources from the market. It's a very good instrument, because what happens is innovators, then people who can dream things, if they were not able to have an IPO market, then we will not have any innovations coming. So most of these people, when they require the money, they come up with an idea, and people are willing to put in the money in that idea. But the initial investors, they come in the form of angel investors, then venture capitalists, private equity. They come in when a new idea is there. When an IPO comes, what happens is, why does an IPO come? Because those people have been long enough long-term investors into the company, and now they want to sell off their stakes. And they can sell off their stakes only when that investor has gone mad, when he is willing to pay any price for it. Now, would any of you really sell off a stake which you have in your company when the price is not right? Only when the price is stupid, that time we think of selling off our stakes. So what happens is, unscrupulous management also enter the market. Like you had to just add the word .com to your company name in the year 1999-2000, and you could come out with an IPO and sell that IPO at any rate. Similar was the case in the real estate boom just 2 years back. DLF and all, they came out with overly priced issues. This happens because you as an investor, you lose your rationality. And every company, will try to take advantage of your irrationality. They will never come and tell you that, well, you are irrational, you can't do something stupid. So in a market, we believe it is an efficient market. But in any market, nobody is going to tell you the truth if they can know that they can capitalize on the irrationality of the investors. So in an IPO, what happens is exactly the initial investors who have been long-term investors, who have been value investors, they only benefit. And in our FOF, we have been always talking about value investing, long-term investing is only what pays. The IPOs give us an illusion that they all have worked, and today when they come out with an IPO and when they are selling the stocks, you would also make money. Well, it cannot happen because otherwise they will not be selling their stocks. Now, the funny part is that IPOs only come in bull markets. They never come in bear markets. Have you ever seen a rush of IPOs in bear markets? They'll never come because at that point of time, investors are fearful, investors have become rational, investors have become wise. They are not willing to part with their money to anybody for anything. It's only in bull markets when they lose their irrationality that IPOs come. Now, for these there are certain behavioral biases which play an important role, and all of us need to understand that what are those behavioral biases within us, because if we understand our own selves, we understand ourselves better. And the good part is that if you understand these biases and if they are with others, you can actually benefit out of that biases, because then you have a mind which is equanimous and able to judge the rationality of any decision making. The first psychological error is the base rate information. Sometimes we make decision based on a singular information. Like just now what has happened is, microfinance companies, they have given gains on listing. Now when they have given gains on listing and when they came out with an IPO, people get overly excited. No, now we are putting into IPO and now we are making money. Last year the same thing was not happening because on listing every issue was going down because it was a rational market. But now today, because of this irrationality, people are only going on a singular information and they start believing that any IPO that come will make money from it. That's why it's known as they extrapolate this information too much into the future. And when they try to do that, there is a sudden chase of IPOs in the markets. The brain takes in processing information. The brain does not process full information, and because of that you have heuristic biases. They believe that you are getting something cheap, that a IPO is underpriced so that you can make money. Why? Because the information was based on a singular information of a few IPOs making money. And that's why they believe that every IPO is a bargain. And when you have that bargain, you can always make money. And along with that, you have also the grey market. The grey market only confuses you because the grey market goes on telling you that you are getting something cheap, you are getting something cheap, but actually it is not cheap. But gains on certain listings, as it is happening in the microfinance sector, they say, make it appear that every IPO is going to be so nicely priced that everyone is going to make money in the markets. Why it is not there, we'll come to it later. Third psychological error is recency and the herd recency. Recency is also a part of somewhere like the availability heuristic, that we make decisions based on all the available information to us which are readily and recently available. Now, when you just now go to the market and ask few people, "Arey, I made so much money in IPO, I made so much money in this IPO, I made so much money in this IPO." So, the recency effect is very strong. Well, IPOs have started giving money. Secondly, most of these IPOs, they come with big advertisement campaigns, and they are selling dreams because they are able to capture on the initial fancy in the market and put that fancy as a dream for you. And the same thing had happened in the dot-com boom, the same thing happened in the real estate, same thing in the power sector. Now, Reliance power issue was there. What were they saying? Powering India. None of the advertisement campaigns talked about the financials of a company. They only talked about powering India, Reliance brand name. Reliance was a Dhirubhai Ambani's dream. Everything else but what the issue was. And ultimately, you know what happened to that. Again with that, grey market. Every day when someone tells you about a grey market premium, you go on believing that, well, something is available cheap. And when your friends start going into this, everyone starts, because that's how the herd mentality starts. Everyone believes that this is true, because a falsehood or a lie spoken by everyone ultimately becomes a truth. And this is what happens in the IPO. The funny part is that we are always anchored to certain things. There was a time in the past where people made a lot of money in certain IPOs like Hindustan Liver, then Digital, Hindustan Tetronics, a lot of stocks they made money. But those were the times when we had the controller of capital issues. The controller of capital issues would control the pricing, because that time we are not in a market economy, we are in a socialistic pattern of society where the controller of capital issues guided everything. And now a lot of people are so anchored, although the controller of capital issues office has been abolished, they are so anchored to the fact that in IPOs you make money. Because there was a time, I know that in my family we had got Hindustan Liver at rupees 16. It was an IPO and we had got. Same way, Digital and all, Digital India Shaving Products, which was at that, now it's known as Gillette, they all were available at about a premium of 5 to 6 rupees, because the government was controlling the premium. Now this anchoring effect is so strong that people have always started believing that, well, IPOs, that means you make money. Secondly, then you have a representative bias at work. Now this also, in the initial stages, when people make listing gains, then IPOs become representative of every listing gain, which normally does not happen. And in a hot sector, when everyone is looking at the stock markets, and when you find that the stock prices are running away in certain hot sectors, where do you look for other good opportunities? But a representative bias makes you feel that, well, an IPO in a certain sector is a cheap sector, so I can get into that sector. That's how the DSQs and all those technology stocks were sold, because the tech boom was there, and these people thought that, well, these are new companies, so we have got a good upside, and so we should get into that. And lastly, we have the round trip fallacy. Now, all successful people are actually hard workers. But does that mean that all hard workers are successful people? It's not there. That way, all cheap stocks are low PE stocks. But that does not mean that all low PE stocks are cheap. There could be 1 or 2 PE stocks, but that company may be closing down within the next 6 months. So when we are in a round trip fallacy, that's why we always start believing that all IPOs are profitable. At the end, I have given a lot of examples to show you that how people have lost money, not money, fortunes in IPOs. Of course, you all were there during 2 years back. You know what fortunes people have lost in only 2 companies, which is DLF and Reliance Power.